Welcome back. As we head into the festive season and the big spending rush of Black Friday, fresh data shows that consumers may be tightening their belts. The latest FNB and Bureau for Economic Research Consumer Confidence Index reveals a decline in the third quarter among middle-income households who are under mounting pressure from rising food costs, weak job creation and dwindling two-pot funds. To unpack the findings and what they mean for the economy is Siphamandla Mkhwanazi, senior economist at FNB. Thank you so much for your time, Siphamandla. Now, it would seem that things are improving in the economy, right? Although we didn't get a cut from the SARB last week, but we have had interest rate cuts. Inflation is still hovering around 3%, which is close to the desired target of the SARB. The rand is strong. Eskom has its turnaround. So why the slippage in consumer confidence?
Thank you for having me on your show, Zinati. You ask a pertinent question. I can actually ask you that question back because these are responses that we get from the likes of you, the consumer at home. Other data such as retail sales also started the third quarter on a very positive note. So it was a bit of a surprise that we saw consumer confidence retracting a little bit. One could argue that, maybe the recovery in the second quarter was a bit more exaggerated and now things are settling where they actually are supposed to be. Okay. But also consumers are dealing with, very high. You mentioned that the decline in consumer confidence was much more pronounced in the middle income households. There we are worried about issues such as high food prices. So that may well have had some, impact on the mood of middle income households. All
right. Well, I mean, just with that, because you actually mentioned something very interesting that is hitting middle income households more than the other consumer categories. I mean, are they just structural headwinds within this category of consumers? What is the difference here?
Right. So we see in that segment specifically, one would have expected actually that higher food prices would have had a much more bigger impact on low-income households, but it seems like this time around it had a bigger impact on middle-income households. So this segment is dealing with low job creation, salaries that are struggling to keep up with inflation. All of those factors might have played a factor. Whereas when you look towards the lower end of the market, those social grants ended up. I know there was three tries. Those social grants ended up being increased by slightly more than inflation. So that might be, cushioning some of the impact.
All right. Yeah. And I do hear you on that. It seems that the one half of people who are employed, their salaries are on a constant upward momentum, while the other half salaries are just not going anywhere while the cost of living is rising. So we're just getting poorer. You spoke about low-income consumers. You spoke about middle-income consumers. What about high-income consumers? Are they insulated?
Right. So high-income consumers, there are two primary factors there that are at play. The first one, you mentioned a cut in interest rates. Interest rates have come down, which means, and the rand has strengthened, bringing down fuel prices, which means more rent in the pocket of more of your more affluent consumers. But at the same time, we saw the support that emanated from the two-pot withdrawals starting to fade. It started fading in the first quarter and all the way to the third quarter. Now we're over to the third quarter now. So that impact is now has more or less have faded. So you've got support from interest rates, but you've got this support moving away from the two-pot withdrawal. It's no surprise, therefore, that their confidence was actually constant at -11. It did not change at all from the previous quarter.
Yeah, and as you're actually talking about two-pot, I'm actually thinking now that I haven't thought about two-pot in a while. Nobody has spoken about two-pot in a while. Even me when I'm broke, I don't think of two-pot anymore, of withdrawing from two-pot. So glad that that boat has passed. In terms of purchasing behavior and decisions from consumers, where are consumers actually putting their money that they do have, and what are they avoiding?
Right. So from this survey, it was quite interesting that, of the three questions that we asked, first we asked them about, their view on the economy, the prospects for the economy, as well as their personal finances. Those two components deteriorated this quarter. However, when you ask them whether the present time is appropriate for them to buy big ticket items,
Okay.
such as jewelry,
Yes.
cars, all of those things, that index actually improved in
Oh.
this quarter. So things are just moving all over the place. Now you take that, you combine it with the latest retail sales data that shows that consumers are actually now starting to spend across the board. So that willingness to spend on jewelry items or your luxury items is starting to come back, which is linked to lower interest rates, inflation that is relatively contained, and the stronger rand.
Yeah, and I can actually even imagine, especially also when it comes to cars as well, that it's not even just that they're buying across the board, but also the influx of more affordable Chinese cars coming into the country. Siphamandla, just one last question before we wrap up the conversation. With the slowdown then in real household consumption expenditure growth, could this then affect third quarter GDP, considering what a big contributor household expenditure is?
That is 64% of our GDP. It is a very good leading indicator, and this direction suggests that we could see a slowdown in household consumption expenditure in the third quarter. However, will have to keep a close eye on how retail sales evolve. I know spending is all encompassing the services, which is a big component, but retail sales is usually also a very good indicator of what is likely to happen to overall household consumption expenditure. But this data point on its own suggests that we might see a slowdown in household consumption expenditure in the third quarter.
All right. Well, thank you so much for giving us insights on this landscape, Siphamandla. I really appreciate your time. That was Siphamandla Mkhwanazi, senior economist at FNB.